what is an economic indicator that you look at to give you a hedge in the market?
Oh, that's a good one. I look at M2 money supply.
Ooh.
So money supply isn't talked about enough, but it shows you like the flows of the actual money in the market in different sectors. So when I saw we had a dramatic dip around October, November, I was like, okay, maybe spending is getting a little bit softer. We got to be careful not to put so much capital into the market. And as this went up, it shows that the market is steadily going back up and there's a lot more safety. So like when you have technical indicators like the 200-day moving average of 72, when you're looking at an economic indicator, you can see the spending literally drop or go up. So in 2019, 2020, it was going up tremendously and everything was on fire. Crypto, housing market, stocks, NFTs, real estate. But then as we had a halt, we saw that the market started to collapse as a result. So that's the economic indicator that I like to use to get a great gauge on the market.
That's a good one. I was thinking about the technical ones for the average person who's listening. Like a beginner, moving average is a good.
Yeah.
New highs, new lows. What do you think about CPI? I know every time you watch
CPI is key.
You watch CNBC or you watch any of these business shows, they talk about the importance of CPI, the Consumer Price Index.
Yeah.
How much we're spending, how much it costs for the things that we're spending as an economic factor to see where the money's going and is inflation coming down.
It takes a lot of courage to do so because there could be a lot of losses there. But trading a CPI report, if you can get the move right, you can make a ton of money. Shout out to my guy P. Like 2 weeks ago, he caught a move, and I don't want to tell, the dollar amount, but he probably caught like 120% gainer in one day in less than like 10, 15 minutes. So like once you know what the numbers are going to be, you can play them in your favor. You can definitely end up making a lot of money as a result. Trading has considerable risk.
Absolutely.
Please consult your advisor. I always say take 300 practice trades before you go live to mitigate any risk, but that report is very key for sure. Non-farm payroll is another one that's important as well.
So, like percentage-wise, how much is that in percent with making a decision whether you should put money into the stock market or not?
M2 money supply?
Yeah.
For me, probably 30, 40%. Because it's a bigger macro indicator. Like you have smaller reports that are key, but when I'm looking at like, I would say top two would be like GDP growth or decline, and then M2 money supply. That's a shorter term indicator to look at, but it definitely has an impact on how the market is viewed. I would challenge everyone to go look at like a 10-year chart of the M2 money supply, see the ebbs and flows, and see when M2 money supply dips, does the market dip with it in correlation? And when it goes up, does the market go up in correlation? It's really fascinating to see those two paired together.
Yeah. And if I'm a investor or I'm a trader, I'm just adding that tool to my belt.
You have to.
Right? So if I didn't know about the M2 money supply, I add that to looking at the CPI. I might add that to looking at the unemployment data.
Yep.
So I get a pretty good synopsis of what the economy is looking like. Sometimes when you look at the charts and you're looking at, it doesn't give you a fair synopsis of what's really happening, right? Yeah. Especially over the past month or 2 months.
Why it's moving.
Right. Yeah. We've seen like the top 9 just push the market. It kind of feels like, the whole market is moving, but it's not.
It's kind of like Kyrie's lay package. Like he can finish with the left, finish with the right. Like the more tools you have in your bag, of course, interest rates are the most important. So if they hike rates, market is going to fall apart. If they pause, that's a sign for like a little bit of optimism. If they cut rates too fast, that'll lead to deflation. But you want to have all these tools in your arsenal to have the real information that the banks, hedge funds are looking at and countries are looking at to make economic decisions.
Yeah, and we saw a pause, not a freeze, but a pause. We didn't even have a conversation about that. What's your thoughts, though? Like,
thank God.
Right? So it's like, do we slow down? And are people looking at it from a standpoint where it's like, okay, they're not going to raise rates again, even though they said that another 2 quarters might happen throughout the course of the year. But that looks like it might be the ceiling for it.
Yeah, I believe they'll raise again. But the pausing of the interest rates hike was key. Because if they continue to raise, I think it would drain all optimism out of the market. Because we would eventually end up with interest rates being like 7.25%. That would be too high. Like even when I'm hearing some mortgage rates that people have now compared to just 2 years ago, I'm like, some people are paying double for the same house if they have like a 650 credit score now. It is insane. So like those interest rates are very key. But I'm glad that they did pause. I can. The rates is funny.
Nah,
shout out to Cameron and Mace. It is what it is.
It's a different pause.
Yeah.
So let's talk about Elon Musk stated that deflation is coming. What is deflation, and do you believe this will happen soon? So we talked a lot about inflation. So I anybody that you probably can guess what deflation is if you don't know what deflation is the opposite of inflation. But talk about deflation and if you think that that's coming soon.
You want to take it first?
I'll lead off.
Yeah, deflation is just advanced price declines. So inflation is when prices are going up. Deflation are advanced price declines. You really want everything to remain stable. Do I think it will come? I'm not sure yet, but I will say with all the information that Elon has and how focused he's been, I'm sure he is seeing something. And I think the overall point that he's making, and I never will want Powell's seat by any chance. I would never want that job. But I think what Elon is alluding to is like interest rates got hiked up a little bit too fast. And what if they start cutting? We'll have the inverse issue. And when we had too much money supply, like everything, the value of everything went up too fast, and now they're trying to correct it. And like it's the same thing when you're driving a car. If you correct too quickly, that is what can ultimately cause an accident. So I think we just need to have things stable. Deflation maybe could come in maybe a year, but I hope it doesn't.
Yeah, this is when we talk about having a soft landing.
Yes.
This is exactly what they're talking about, right? Like we figured out that 0% interest rates don't work, right? But you raise them, and like you said, we could get up to 6% at a certain point. But where do we want to land, right? And there's talks that, hey, we need to get it down to 2%. Well, if we're at 6,
how do we get there safely?
How do we safely get down to 2? Yeah. And so it becomes a fine balance. And again, it sounds crazy, but like people are going to have to lose jobs.
Yeah.
Right. Because you got to have the unemployment rate go up, which is like for the average person, it's going to affect you.
It is.
Right. And so that's why you try to make this as soft as possible, quote unquote, the soft landing, so that it's a steady process. It's stabilized to a point where it's like, all right, this isn't a harsh effect.
Yeah.
Right. We're just not going to turn this thing upside down, pause. But we're going to figure out a way to make sure that the economy stays stable. Right. People still can be employed.
Yeah.
And it doesn't go back to, all right, well, we raised it, we got it lowered, this isn't working, we got to hike them again.
Yeah, and I think it's really tough to have a soft landing without transparency. Like, they've been clear on what they want to do, but it doesn't seem confident in any of the decisions that they want to make. Like, 1 week it feels like we're going to raise rates for the next 2 years. Then the pushback isn't positive, and then they change tune a little bit. I think if they just honestly said, hey, here's what the plan is, we'll have a rough 18 months or 2 years, but for the next 10 years, this will be better. I think most business owners and governments could handle that. It's the indecision that really leads to a lot of the confusion.
Yeah, a part of it was, even in 2022, when, we saw that the rates were going to be raising throughout the next 6 to 8 months. It was like, this is going to stop in March.
Yeah.
And here we are in June, and they're saying there might be 2 more. I feel like the market doesn't believe what Powell's saying anymore, right? There's not like that firm confidence, like, he's saying it, but if he paused it, then why not just, have the rate hike in June?
Yeah.
Why not have it in a few weeks here coming in July? Why not just have it consistently rather than pausing and saying, all right, we're seeing the numbers cool down to a pace that we like. All right, but we still have an option, right? I think he's just leaving it as a variable option, just in the event that the numbers start peaking back to a point that is unsatisfactory to him. So it's like, all right, we'll raise it because I told you I would.
And I don't think he's doing a bad job, but I think, and we all know in being a leader, you have to have a very clear and firm path on which you're going to like blaze a trail. And we've seen that with Alan Greenspan, a little bit with Bernanke. I think we need that from him. But I mean, it's one of the most difficult jobs on earth to correct. And because ideally, a zero interest rate environment is great for the short term, but it hurts us long term. And now he's in the driver's seat after all this exuberance has been rushing around for 15 years. Yeah. And now you have to be the one to say, hey, no more fun, no more parties. Like, we're on financial punishment right now. That's a tough job to have.
But the interesting part is that as those rates start to come down, what do you think, which type of companies benefit the most from that?
Tech, for sure.
Right.
Right. Fintech, most finance companies that were like running thin on margin, those will come back. Maybe automotive will come back as a result. But who knows if it would be short-lived.
Yeah, my first thought was the tech sector. It's like, all right, the price to do business obviously goes down, infrastructure goes down, logistics goes down.
Yeah.
That helps the economy, especially from when we talk about what's leading it, tech. And so those companies that we talk about, those top 9s that we continuously, I know you say Apple and Microsoft, I mean, that's a great benefit.
And small cap, some of the Russell 2000 will go up.
Yep.
Too.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop. Bag drop.
Bag drop.